Tesla stock could blow everyone's minds coming next week. Now, what's coming next week, you might ask? Well, Tesla's earnings. Tesla stock historically over the past couple of quarters has had some very rough earnings. The next day, in fact, falling almost 10%, the last 3 earnings alone. So it's easy to see why Tesla stock has fallen so much. Well, there could be a couple things in the cards for this earnings that could blow people's minds, that could catch the shorts and the bears dramatically off sides in Tesla stock. And I want to share with you guys my opinions here in this video. I do have some trades that coincide exactly with what we're going to talk about here in this video. If you guys want to see them, check out the link down below in the description of this video for the trading community. So first and foremost, let's point this out just so you guys know that this information is factual, so you don't have to go ahead and double check it. On April 20th, the day after Tesla's earnings, Tesla dropped 9.75%. On July 20th, the day after Tesla's earnings, Tesla dropped 9.74%. And last earnings, the day after, which was on October 19th, Tesla stock dropped 9.3%. So Tesla stock largely, I believe this drop that we have seen recently is pricing that in. It's pricing in bad news. And I think you have more than fully priced in that bad news. Now, you've also been seeing Tesla cutting prices for Model Ys in Europe, for Model 3s in China. That's also had a negative impact. And it's hard to, let's say, get shorts to not short Tesla or to cover on short positions when the last couple of earnings have been very red. And normally when Tesla starts cutting prices, they continue to cut prices. So short sellers, they've been attacking Tesla stock. Tesla stock has fallen from $265 per share on December 28th. Less than a month has gone by and Tesla stock is $210 at the time of recording this video. On Friday, you actually hit a low of $207 per share. Now, another reason why I believe Tesla stock is probably in the process of bottoming is because you are oversold on the RSI. Now, this comes as the SPY hits a new all-time high on Friday, soaring up almost 1%. Tesla, not so much. Tesla stock down about 1% today. Now, over the past 3 earnings, when Tesla stock has fallen 10%, sometimes you do see a continued drop, but normally once you get oversold, even a little bit, that's when Tesla tends to bottom. Now, believe it or not, the biggest thing that actually affects whether or not a stock goes up or down on earnings is expectations. Now, expectations can come in terms of guidance, expectations for EPS, revenue, margins, all of that. Tesla is unique because we kind of already know how the earnings are going to be. Obviously, we don't understand margins and where those are going to be, but we know what Tesla's deliveries are. We know what the average selling price is likely to be. So just based on my estimates, which are higher than Wall Street's, I think Tesla could come in around 90 cents of EPS with just under 27 billion worth of revenue. So I think Tesla is going to beat the numbers. Guidance, who knows how that ultimately plays out. But really down to what moves the stock more specifically is expectations. Like I just said, if a stock is trading very well heading into earnings, it takes a big beat. It takes some great news or something that wasn't expected to move the stock higher. Think about Nvidia's last couple earnings. The stock fell following earnings, even though Nvidia beat, they raised guidance much higher than expectations. The expectations heading into Nvidia earnings were already way too high. Well, now Tesla's expectations are super, super low. Like Tesla stock, if Tesla's going to fall another 10%, it's going to be because you see some absolutely terrible guidance. Elon said something off the walls on the earnings call. So at this point, just the slightest bit of good news could send Tesla stock up big time. Now, let's say we get really good news, like what we'll talk about here in this video. Now, let's say Tesla gets some really good news, something that is truly unprecedented. Like, let's say the announcement of a $25,000 Tesla coming by the end of this year. That, for an example, would probably send Tesla stock about 20% higher if that news came out on the earnings. Maybe we get news of a smoother Cybertruck ramp than what we're already expecting. That would be some really good news as well. Maybe Tesla gives us licensing of FSD news. Maybe Tesla gives us higher delivery guidance than what we're expecting. Or maybe we get clarity on the Indian factory when that's expected to be completed. My point here is simple. Tesla stock is not priced for any good news on any of those things. Tesla stock indeed looks like it's priced for bad commentary again from Elon, relatively weak numbers, especially margins, and bad forward guidance. That's what it appears like Tesla stock is priced for. I'm here to say that if we get any good news, it's going to be seen as really good news for Tesla stock. I think Apple stock is a pretty good example of what I'm trying to explain. Apple has been falling quite a bit because of analyst downgrades, bad news here, bad news there. iPhone shipments down 30% the first week of 2024, a potential antitrust lawsuit coming from the DOJ. And then what happens? Yesterday, Apple got an upgrade from one analyst. And what happened? Apple stock rallied 3.26% yesterday, which is a huge market cap move. And then today, Apple's up almost 1.5% yet again on relatively small news. Like one analyst upgrade is usually not the biggest news. But considering Apple stock had fallen from about $200 per share down to $180, it was seen as really good news. So it does appear that Tesla is set up in a similar position. Now, also worth noting that over the past 12 months, Tesla stock has gotten oversold 4 times besides this time. That would be 5 times technically. But going back to December of 2022, when Tesla stock was oversold because Elon was buying stock, every time you have gotten oversold, Tesla stock has bounced 30 to 100%. Typically, over the past 3 earnings, as I've explained, Tesla stock usually hits oversold following that 10% drop on earnings. Tesla stock's already oversold heading into earnings. So you might actually see what could be a 10 to 20% rally coming on Tesla's earnings. Now, I'm not a fortune teller. I don't know what Tesla is going to announce. Let's say Tesla did give us some bombshell information about a $25,000 vehicle coming by the end of this year. That is possible. Some people expect that to happen. At least we could get an announcement here coming next week. That would have probably a 20+% impact on Tesla stock. Now, if Tesla stock was trading at $270 per share, $260 per share, it may have only been a 7% gainer, a 10% gainer. So you are looking at a larger potential rally on good news coming next week. Now, we do have some other good news that I want to share as well. Now, I have talked about this before here on the channel, but coming on January 31st, you're going to have a massive catalyst. That is Fed Jerome Powell. Now, what you've seen over the past couple of days, yeah, stocks have gotten wrecked under the surface. The SPY has done well because it's market weighted to the Magnificent Seven, right? You understand that. Stocks have started to give back a lot of the gains you have seen over the last 90, 120 days or so. So keep that in mind. But for January 31st, Fed Jerome Powell will be speaking. Now, we were just pricing in 7, almost 8 rate cuts for 2024. Now we're pricing in 6 and almost, whoa, look at that. Here now, you're pricing in 1, 2, 3, 4, 5. Looks like, oh, hold on. 1, 2, 3, 4, 5 rate cuts. Now you're only pricing in 5 rate cuts at 34%. A week ago, 5 rate cuts was 10.8% likelihood, right? So you've actually de-risked massively heading into Fed Jerome Powell on January 31st. If markets are pricing in 5 rate cuts, then when Powell says we're only expected to cut rates 3 times, that's not nearly as bad as, let's say, if the markets were pricing in 7 or 8 rate cuts and Powell says, hey, we're only going to probably cut rates around 3 times. They're much different playing fields, okay? So if as long as we continue to price in 5 rate cuts heading into January 31st, I think Powell could actually be a positive catalyst for our markets. We also will be getting news on potentially the Fed slowing down or stopping their balance sheet runoff, which could be $60 to $90 billion of stimulus coming each month for the markets. That could also be some very positive news for the broader markets. Now, there are always going to be risks, though, associated with Tesla earnings, especially now, even as Tesla's cut prices in 2024. But we need clarity as well. Are price cuts going to continue? Our margins at the bottom? Are margins going to get worse? Elon and Tesla have yet to still give guidance of margins. They previously said margins would not go lower than 20%. We've seen that already happening. Margins are expected around 16 to 17% for this upcoming quarter. Do they give guidance on that or not? That's minus any $25,000 vehicle announcement or any other potential good news. That is the next biggest thing that could move Tesla stock. If Elon says price cuts are pretty much done, margins are going to stay above, let's say 16%, 15%, whatever it is, then Tesla analysts can start to price in what that actually means for numbers a little more clearly. It's unfortunate every couple of weeks or every couple of months, Tesla cuts prices. Analysts have to go back and try to figure out what that means for Tesla's EPS going ahead and for Tesla's valuation and ultimately price targets for Tesla stock. Now, following this upcoming earnings, I think that's also important to point out. If Tesla stock does have a positive reaction to the earnings and the earnings call. You've seen a lot of analysts lately, even UBS yesterday, that lowered their price target from $260 to $250. That has happened a lot since the start of 2024 because Tesla stock has basically been falling like a rock. This is one of the fastest down moves that you have seen since December of 2022 when Elon was selling billions of dollars of stock to buy Twitter or X now. So if you do get a good announcement, if you see Tesla stock do well following earnings, analysts are likely to have to raise their price targets. Now, a lot of this is only speculation. I do think it is possible we get a $25,000 vehicle announcement coming this earnings. And I think Tesla might do that for a couple of reasons. If the numbers are not quite great, if the margins are not quite great, that is something they know they can do that will probably send Tesla stock up regardless of what the numbers are, assuming they're not utterly terrible. But again, that is only speculation on my part. Anything can happen. But the point is, here's the bottom line. Tesla stock is priced for very bad things. We're probably going to get good things, at least maybe not as bad, right? So Tesla stock is more than likely, I would say probably 85% likely, to see a very positive reaction following earnings and maybe a 15% likelihood of seeing very negative returns coming after the earnings call. And that's because Tesla stock from peak on December 28th to the low that we hit today has fallen almost 22%. And I'll tell you right now, a 22% decline in Tesla stock did not happen because Tesla cut prices 2 to 6% on Model 3 in China and cut prices around 6% for the Model Y in Europe. 22% did not do all of that. Some of this is just baking in bad news on earnings. And as I just said, Powell is probably not going to be as hawkish as he otherwise would have been since we're now only pricing in 5 rate cuts for 2024. Good Tesla earnings, good earnings call, maybe some really good news mixed with a semi-hawkish, semi-dovish Jerome Powell. It's probably going to be really good news for Tesla stock. At this point, the biggest wild card is going to be earnings for your S&P, for your big tech, because here's the bottom line. Markets, analysts are expecting 11% EPS growth for 2024. Stocks are largely trading on that narrative. So if you start to get earnings that come in from especially Magnificent Seven, they control like 40% of the market weighting in the SPY and the triple Qs. So most of the dollars or growth of EPS is probably going to come from those stocks. So if those stocks have bad earnings, not so great EPS, and maybe earnings come in at 7% growth year over year, maybe the full year outlooks are not quite 11% growth. That's the biggest potential risk you could have in our markets. A simple just valuations not matching up, meaning expectations are for, let's say, $240 of EPS, and companies guide for like $220 of EPS. That could be a big risk to our markets as well. Although I think Tesla's priced for that, if the markets did come down, that would still be very negative for Tesla. So here are my expectations. As long as we don't get any crazy big bad news for Tesla's earnings, I think Tesla stock probably rallies about 10% alone following earnings. Now, if we do get some kind of really good news, maybe it's a $25,000 vehicle, maybe it is, FSD licensing, maybe it's progress with Dojo and selling software as a service, who knows? But if we get some really good news, maybe a comp package for Elon, different tiers, maybe Tesla outlines that like $5 trillion, $10 trillion market caps, who knows? There could be a million and one things that are announced. But if we get some really good news, Tesla stock could rally probably about 20% following earnings, like the day or two after earnings, by that upcoming Friday, because Tesla will report earnings on Wednesday. You could rally 20% by that Friday, and that would put Tesla stock back in the 250s. Now, if we don't get any kind of really good news, things are kind of same old. We have a typical Elon on the earnings call. Numbers come in okay. Guidance comes in okay. There's really nothing to speak about. Tesla stock is probably up or down about 2 to 3%. Now, I would say the up move in that scenario could be closer to 5%. A potential down move could be closer to like 2%, just because you have already fallen so much and you have already priced in a lot of that bad news. So 2 to 3% lower from here, let's say 3% lower from here, would put you to about the low 200s, about 204. Now, a 5% upside move would put Tesla stock back to about 221. So which one do you think is more likely? Let me know down below in the comment section. Again, considering Tesla stock is oversold, it does change this earnings quite a bit. Typically, stocks that are oversold tend to bounce anyways, but heading into earnings, yeah, that makes the risk to reward proposition very unfavorable if you are a short or if you are a bear in Tesla. It is indeed worth mentioning that you did see the low of Friday of today get bought up pretty aggressively, and now you're closing at pretty much the high of the day. That's a good sign that the sellers got exhausted and the buyers came in and started buying Tesla. Something else that is notable are the cost to borrow fees. So cost to borrow fees are really a reflection of supply and demand. So the higher the cost to borrow fee, likely the less supply you see and the more demand you see. So Tesla's cost to borrow fee is about 10%. You can imagine that a lot of this 22% downside that we have seen since December 28th until the low of the day on Friday of today, well, a lot of that was due to short sellers taking on new short positions. Now, if you are a short that may be shorted at 240 or 250 and you're up on your position, maybe $40 or $50 right now, then if Tesla does have good earnings, you're much more likely to see short sellers start to cover on some of their short positions to take their win and get out before that turns into a loss. Let's be honest, everyone knows the explosive potential that Tesla stock has. If you're shorting Tesla now, that's very unfavorable. So in other words, some of the shorts that you've seen taken on a week or two ago might start to cover on their short positions if Tesla has good earnings. Now, for those of you guys that did make it to the end of this video, the trade that I put on was Tesla 250 calls expiring February 2nd. I bought 10 of them for $59 a piece. This is an alert set out in the trading community, so I spent about $590 on these. I said I have to take advantage of this crash. Tesla reports earnings next Wednesday. It's almost certainly going to get a bounce. These contracts could juice big time heading into earnings. And in bold letters, capital letters, not financial advice, looking to do the same strategy and sell the 255s before earnings and collect the $59 back. So that is a ghetto spread or legging into a vertical call spread, whichever terminology you want to use. But it's a specific strategy using a risk to reward calculation to say, hey, the odds are we get a bounce heading into Tesla's earnings. The IV on the contracts could juice the contracts quite a bit. It could be pretty easy to sell the 255s, turn that into a potential $5,000 max upside trade. Now, this is a trade that says, hey, Tesla's going to hit 250, potentially, in my opinion, over 255 by February 2nd. So not next week, but the Friday after that. Now, obviously, it goes without saying, if you trade anything or any trade you see in a YouTube video or any trade that anyone else makes without knowing what I know or without using due diligence or taking into account risk or all these other factors, you will lose money, and you could lose all of your money. Odds are, if you just bought these contracts and held them, you would lose all of your money. All $600 in this trade, you would lose it. So do not trade that. That's just showing you that I feel very confidently about this information that we spoke about here in this video. But again, not a recommendation. Do not trade that at all. You will lose all of your money. Thank you for watching, guys. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.